When you studied economics in college, you probably learned about the invisible hand, a term coined by Adam Smith in 1776 to describe the natural force that guides free market capitalism through competition for scarce resources. Today, in fact, this instinct is given free rein in markets around the globe. Certainly, most financial executives take it as an article of faith that markets eventually lead to the fairest prices and to the most efficient distribution of goods. So then, why don't more enterprises resort to markets when it comes to making decisions about organizational resources? After all, market-based systems have proven to be accurate, efficient, and technologically simple.
Joining us is longtime expert commentator Dean Meyer, who specializes in organizational transformation and who recently authored Internal Market Economics. Great to see you again, Dean.
It's great to be back. Thank you, Becky.
I remember taking an introductory course in economics, Dean, and one of the few things I recall is the professor explained to us that a market economy is where decisions regarding investment, production, and distribution are based on supply and demand. But what do you mean by internal market economics?
Market economics is pretty simple. Customers control spending power. You've got a checkbook, you go to the grocery store, you know how much is in your wallet, and you decide what you buy. It's up to the store to earn the position of vendor of choice. They've got to have a good selection on the shelf, it's got to be fresh and up to date, it's got to be good value, that is, the pricing has to be good. You have to enjoy shopping there. You build a relationship. The same should be true inside of organizations, whether we're talking about IT, HR, finance, facilities, engineering, marketing, anything else. These are all little businesses.
You know our viewers, executives and managers. After all, Dean, they're your clients and readers. For the most part, they're like me. They took at least one college-level course in economics. Do they really need a deeper understanding of microeconomics than that?
No, you don't need a PhD in economics to make sense of internal resource governance processes, but there are some things you need to know or think about. There are internal processes and methods you need to think through, like the way you go about your planning and budgeting. There may be some changes in the way we do accounting and the way we measure our managers.
All right, so let's say that someone is running a corporate staff that provides internal services. They don't actually interact directly with the enterprise's external customers. So are they really involved in a market economy?
You know, Becky, clients ask me that all the time. In fact, let me tell you a story. I was working with a management team at a university. It was in the IT department. And I was describing IT as a business within a business, there to sell products and services, whether or not money changes hands, to the rest of the academic and administrative clients. And this guy said to me, you know what, we are not a business, we're an institution of higher learning. Well, I said, you know what, your clients may be in the higher education business, but you're in IT. We could outsource you in a minute. You absolutely are a business. So you better be clear on what your products and services are, who your customers are, you better be best value, and you better be pleasant to do business with. Everybody is a business within a business.
Well, Dean, I'd like to put you to the test. Let's role play how internal market economics can solve my issues. I'm a mid-level administrator of an IT-related function in a healthcare organization. I've got a mission, and I've got a staff, and I've got to prepare a budget for next year. And they've already told me that I'm not likely to get more than a token increase over last year's budget. So that's not an uncommon situation, is it?
So far, you're describing a situation, Becky, that I think every one of your listeners will identify with. You know, most organizations are under some budget pressures, and most managers have a lot of ideas. They'd like to do more, but the resources just aren't there. So what do? You got to put together a budget. You're presuming you're not going to get more than last year. So you plan out what you want to do in the year ahead, compensation, travel, training, vendor services, and so on, and you hope for the best. One thing you're not likely to do, Becky, is put in your budget a bunch of new ideas, new projects, new services, because you're afraid that you're going to be expected to do everything you did last year, perhaps with some higher volumes, and all that new stuff, all for the same budget as last year. It was tough enough making ends meet. You're certainly not going to be creative, entrepreneurial, and put new ideas on the table. So what opportunities might we be missing? Really great ideas. What are we missing because of this traditional budget process?
Look, I'm not a rookie, Dean. I knew that they'd make some cuts, but I've played this game before, so I built some leeway into my proposed budget, just in case.
That's right, Becky. You build in a little fat. They know this, so they send you back to, what do they call it, sharpen your pencil? And you do. And you come back promising all the same stuff for a little bit less. And what happens after that? They send you back again, right? And it's back and forth in this sort of dance that is unlikely to lead to a sensible number. How do we know whether you've cut out all the fat? There may still be some in there, or they may have cut into the bone. It's not a reliable process for optimizing shareholder value. One thing it is good at, though, that whole process is very good at reinforcing the belief that your numbers aren't to be trusted.
Well, unfortunately, that's a very likely scenario for what happened, Dean. My budget was not very warmly received. The stock market may have hit a new high this week, Dean, but our organization's top-line revenues are down. The message is out. You've got to do more with less. And I've got to tell you, my staff is already stretched to the max. Can they really expect us to do more with less?
Sure, Becky, we can expect you to do more with less, on the condition that you've got people sitting around wasting time and money. Is that true? You know it's not, Becky. You've been pursuing productivity improvements and cost savings year over year throughout your career, since you've been here. You haven't got people sitting around wasting time and money. You're going to do less with less. And the only interesting question then is, how do we go about determining what that less will be?
It seems as if no one understands what my staff does and why IT costs are so high.
That's right, Becky. You submit your budget and they all scream, why do you have to cost so much IT? They see the cost at the executive level in the budget process, but they may not see the value, often much of which may be felt at lower levels of the organization. Well, there's a reason for that. You're submitting a budget for what you want to spend, not for what you're going to deliver. You tell them the cost of IT, but it's not linked to any value to the business.
Well, for budgeting purposes, they've given me general ledger expense codes like compensation, travel, and training. As a result, every figure is second-guessed and micromanaged. I doubt that I'll get any money for upgrading staff skills. What's likely to happen?
Picture a spreadsheet where the columns represent the general ledger codes. You know, compensation, travel, training, vendor services, and so on. And the rows represent your deliverables, the projects and the services you'd like to deliver in the year ahead. Well and good, people fill in the spreadsheet, but then the mistake that so many make is they total the columns and submit a budget for compensation, travel, and training. Now, what is that going to do? That's just begging for micromanagement. I mean, they've got to talk about something, so what have you given them to talk about? Your travel, your training? You're just setting yourself up for the wrong kind of dialogue. Meanwhile, they're not making the decisions they ought to be making, which is how much to spend on your function. That should be driven by the needs of the business and the investment opportunities at hand. But Becky, you can't judge ROI on compensation, travel, and training, can you? So what do? They make arbitrary decisions like last year plus or minus a percentage, maybe fund a few big projects, nothing to do with shareholder value, with the needs of the business. You know the right answer. It's to total the rows, not the columns. To submit a budget for what you plan to sell, not what you plan to spend. Understood. The enterprise has less to spend. Less to spend on your function and everything else. That's the reality. But let's engage in a thoughtful process for deciding what we can and cannot afford to do. And then let's fully fund those fewer things that we intend to do so that we succeed at them rather than failing at everything.
Well, I'm in a difficult position, Dean. I know what services we're providing to other areas of the organization, and I know they want those services, but how am I supposed to put a value on those services?
I think we're pricing our products and services at cost, not value, not market, but at the true cost to shareholders, taxpayers, or donors. But that's got to be the full cost including fair share of indirect costs. Now that full cost concept is critically important because you never want to submit a budget request for something that people don't really buy, like your overhead. You want to only submit budget requests for the products and services that have value to the business. And to do that, overhead and all the indirect costs have to be apportioned into the rates for those products and services. So full cost model is essential to running this as a business.
How am I supposed to purchase new equipment or upgrade our existing infrastructure on a level budget?
Imagine that you're at home and you need a new email account. So you go to a provider, Earthlink or AOL or something, and sign up for their email, and what is it, $25 a month? Fine. But you're the straw that breaks the camel's back. They need a new server. So you get a bill at the end of the month. It says $25 for your monthly subscription plus $1,200 for your share of the server. I don't think you're going to pay that, are you? What really happens? In a market economy, they go to the bank. They make a business case. They borrow the money. They buy the server. They pay the bank back depreciation, and in their case, interest. It's a mortgage formula. And their mortgage payments are embedded in that $25 rate for the service. Well, you know what? Internal entrepreneurs need exactly the same thing. They need access to a bank. That would be corporate treasury, where they can borrow money, not just for the capital for infrastructure, but for any significant one-time investment, innovation project, and pay it back through depreciation, and that depreciation gets embedded in the rates that for the products and services that clients buy.
Okay, I got my budget. So did all of the groups in the organization that use my services. They got their budgets as well. I figured out an allocation of how much each group had to pay for their IT services. What a surprise. Everyone thinks they're now paying too much for IT.
There are those who believe that allocating the costs of shared services to business units gives us a better read on business unit profitability. But really, allocations don't add value in the sense that they don't really drive economic decision making. These are not decisionable costs. They're not the products and services that business units can choose to buy or not. So business units can't really control their costs by deciding what they will and won't buy.
That's not the only issue with these allocations, Dean. The groups made their payments, but now these users, my customers, believe that they're entitled to any and all IT services that they feel they need to do their own work.
Exactly. We gave you all that money. Now, why can't we have anything we can dream of all year long for free? Well, from their point of view, why not? Everything is free. Might as well get my requests in the hopper, and you end up with this absolutely unimaginable demand chasing your finite resources, and it's your fault if you can't deliver infinite service on a fixed budget. How's that for a deal?
What could internal market economics do for a staff organization like mine?
At home in the Northeast, we use a lot of fuel oil. And come Thanksgiving, the truck rolls up and I end up with a $2,000 bill. Well, that's a lot of money to me. So my oil company came to me and said, look, if you just put in $200 or $300 a month all year long, you'll build up some escrow during the summer. And then when Thanksgiving comes around, we fill up your tank and we'll invoice and you'll pay it out of that prepaid account. Now, that doesn't mean they're selling me all the oil I can burn for $200 or $300 a month. All they're doing is leveling my payments. So think of your budget, or think of those allocations in exactly the same way. It's a prepaid account. It's not the price of a bundle of things. It's just a bunch of money put on deposit with you to buy your individual products and services.
That makes sense, Dean, but how does that manage expectations or control demand?
So your budget is flowing into a checkbook. It's not being distributed among your managers to pay their costs. It's a checkbook, a prepaid account that belongs to clients. Clients know how much is in their checkbook, and you publish a catalog of your products and services at full cost. They know what things cost. Now they understand, they're in control, they can buy whatever they want, that they understand that they can only afford so much. If the business needs more, they've got to come up with more money. But at this point in time, expectations and resources match. This is business-driven demand management. You've put customers in control of what they buy, responsible for living within their means. You've implemented the market effect without actual fee-for-service chargebacks, without transfer pricing.
Dean, in your analogy, you knew it was going to get cold around Halloween, so you ordered the fuel truck to make a delivery around Thanksgiving. How can I figure out a way to organize and schedule the services that I'm going to deliver to these business units all year?
Becky, you're right. We're planning in advance of the year. How can we really know what's going to happen in the year ahead? What we've got to do is fill up checkbooks, whether it's with your direct budget or allocations, doesn't matter. We need to fill up checkbooks and plan our business based on what we know at that point in time. Now, they may spend 70 or 80% of the checkbook right up front for all the keep the lights on services, but for the discretionary projects and services, they have a right to adjust priorities continually throughout the year. So in addition to a planning process based on investment-based budgeting, we now need another process all during the year to continually adjust priorities. So now you're continually adjusting to the ever-changing needs of the business, shifting strategies, shifting markets and economics. You're continually, dynamically aligned with the business all year long. Planning fills up checkbooks. A dynamic process all year long adjusts priorities.
In the past, the secret to our success has been we had teams that would collaborate with each other. But now, based on the checkbook approach, everyone only wants to work on his or her own workload responsibilities.
Well, with traditional processes, everybody's so overwhelmed with demand exceeding supply. Every manager does his or her best to set priorities. But in fact, one manager's highest priority may be another manager's lowest priority. And teamwork collapses. They can't get help from one another because everybody's so overwhelmed. They can't trust one another to deliver because everybody's so overwhelmed. So what do people do? Well, you got to get your own projects out the door. They learn to be self-sufficient. They replicate others' skills, dabble in others' territory, do an amateur job of it, but they get their products and services out the door. That's where stovepipes come from. Now, with internal market economics, what we're doing is the cost of a project is the cost of the prime contractor and all the subcontractors. We need to add up the total cost of the project and either fund it all or not at all. And that way, resources will never be an obstacle to teamwork.
Let me ask you another on the one hand question, Dean. On one hand, I want to fill the requests of the business units that have paid their allocations. On the other hand, there are strategic objectives of the larger organization that I'd like to address, but it doesn't seem possible for us to do both.
Interesting, Becky. Your question implies that there's a difference between the strategic imperatives of the enterprise and what your clients in the business want to buy from you. It almost suggests that if you looked at the strategies of the business, you could come up with better ideas than what your clients are asking for from you. I'd like to challenge that. Enterprise strategy is executed by those clients of yours. Each of them signs up for a piece of strategy based on their mission and their role in their domain. They're the ones who have to implement strategy. So they want to buy from you exactly what they need to achieve those strategies. It's not up to you to second guess them and tell them what they need or to contribute to strategy independent of them. By serving the perceived needs of your clients, you will be aligned with strategy automatically.
I'm ready to try it, Dean. But does it work for an IT staff, particularly one that's part of a healthcare organization? Does one size really fit all?
Well, I've implemented market economics in such a variety of organizations, in federal government, state government, local government, higher education, not-for-profit, and of course corporations of all shapes and sizes in all industries. And while their products, the products and services they sell as a corporation or as a not-for-profit or government organization differ widely, the principles of market economics are the same wherever I go. You've got people with finite resources trying to deliver services to clients throughout the enterprise who want more, and somehow we've got to go about deciding what we can and can't afford. Wherever you look, it's the same. There's only so much money. Now our challenge is to decide what is the best use to optimize the mission of the organization or incorporation shareholder value. I think these principles are universal.
Well, I enjoyed the role play, Dean, but now it's back to here and now. What should organizations do besides buying a copy of your new book? Is there a first step that they can take to see how they could import internal market economics into their own enterprise?
The place to start is the planning system, not the actuals. Don't focus on your current accounting just yet. Start with that annual business and budget planning process. And let's turn that into real business planning. Business planning meaning, what products and services would I like to offer in the year ahead? And to whom? And what kind of volumes am I going to be looking at? Without a business scenario for the year ahead, how can you plan a budget? How can you know what you're going to spend? And then we drive spending off that. What will it take to fulfill that sales plan, if you will, for a business within a business?
Well, good advice, Dean. As always, you've covered a lot of ground for us. Let me ask you the question that I always ask. What would you like our viewers to take away from this program?
Becky, one most important thing I hope you'll take away from today is that the financial processes we're talking about, budgeting and accounting and so on, the resource governance processes, deciding priorities, these are not just cost management processes. These are not just accounting processes. These are fundamental to the effectiveness of organizations and absolutely strategic. When you're designing processes to manage demand, to manage expectations, to decide budgets, to decide priorities, start with what you know. Start with market economics. And there you'll find the principles you need to design sensible, efficient, dynamic processes. This is not just a matter of money. This is shifting the whole organization into creative, customer-focused, entrepreneurial thinking, teamwork through subcontracting. It's a different way of thinking. I assure you this is absolutely transformational.
Dean Meyer, author of Internal Market Economics, thanks as always for bringing us up to date.
Oh, my pleasure, Becky. Thanks for having me back.